In the energy quadrant today, taking a look at the May crude oil contract, which did have a rally, but the excitement was kind of taken out of it by the volume. It was a very low volume rally, getting up about 1.17% on the close. Settlement was right around $60.40. The high 60.59 fell just a hair short of being up 1.5% versus yesterday's settlement. On the low side of things, we're down about 6 cents from yesterday's settlement, so 10 basis points. Not much of a move down at all today, but the volume kind of took the shine off the rally. It really was a decent rally in terms of being up 1%, but the volume, based off of preliminary estimates, was the lowest volume we've seen since about March 16th. So you can't really get excited about that until there's some volume follow through. Now, demand forecast from OPEC changed. On Tuesday, OPEC raised its forecast for growth in world oil demand this year on expectations that the pandemic was going to subside a little bit, providing help for the group to kind of keep their efforts and support the market, even though they've upped production a little bit. According to OPEC, demand is going to rise by about 5.95 million barrels per day in 2021, or 6.6%. That's a boost of about 70,000 barrels from the expected demand that they reported last month. And this is, again, world oil demand. So it's a decent sized number. It's not huge, but still enough to kind of keep a little bit of a tailwind behind crude oil despite the low volumes. I think the low volumes probably showed you that people didn't get too excited about that particular bump up, as it's not really a big number relative to global oil demand. Now, seasonal strength continues right now. We did get US CPI, which showed that seasonal strength in terms of the amount that crude oil prices had risen. Obviously, there were other factors involved, but energy has been one of the best performers of the year, and crude oil is a big part of that. And if you broke down the CPI, you saw the increase in energy prices being one of the largest, especially the crude oil increase. But we're going into a part of that seasonal strength where typically the market prices stall, at least over the last 15 years or so. As you get in toward May, there's one more seasonal spike, and then there's some sideways price action. Again, seasonals cannot be relied upon on their own, but they can be a headwind or a tailwind. There's not really a dip coming. The strength in crude oil tends to continue based on the summer driving season and its strength through August. But we are going to get a little bit of a sideways pattern in terms of the historical seasonal strength, and that could potentially affect the tailwind of crude oil, all else equal. So you're going to want to keep an eye on that moving forward.